What's going on, everybody? I hope you are having a wonderful day. Let's get into it, guys. We got a lot to talk about. We're going to be talking for about 40 minutes before we get the FOMC meeting with Jerome Powell, his last meeting, Jerome Powell's last meeting as the Fed chair. So let's see. Let me out zoom a little bit. How do I look? I look good. I look good, guys. Oh, man, I hope everybody's having a beautiful, absolute beautiful day. I am. Wife and I woke up. Well, obviously, I got straight to content. I always record video. What's happening pre-market, what's happening post-market. SoFi earnings came out this morning. You know, I keep everybody updated, make that content. Recorded some long-form videos. Posted a new Kaspa video. And then my wife and I went and hit the gym. It was really good. We don't do that a lot. And so we're getting in the routine. And so, in fact, I need her to bring me a charger real quick. Let me text her. Because my mouse is wireless. And this is going to be a long stream. I don't want to die in midstream, guys. But I want to get into everything that's happening. You guys know my thesis on everything with the market, where I think it's going, why I think it's going, where it's going. If there's anything y'all want us to look at specifically, just drop a comment down below. But hey, if you're over on YouTube, please hit the like button. It helps out more than you know. And subscribe if you're not a part of the Finance Freeman family. And if you're over on X, please click the retweetity tweet button. And yeah, if you don't follow there, make sure to join the Finance Freeman family there as well. We post a ton over on X. We post a lot on YouTube too, but you know, X is where everything's up to date. It's where all the clips are posted, everything like that. So guys, if you don't follow us over on X, I definitely recommend coming over here following. There's a lot of fake pages. At Finance Freeman is the only real page, 14.3K. This is the only real one, but you can see the amount of content that we post. You know, it's a full-time job for me, right? No longer a chemical engineer. So I am definitely. We post a lot to keep you informed. I understand a lot of people have jobs, they have family to raise, they have stuff like that. So my goal with content is that you know that you don't have to look at anything, right? That you can go about your day, you can go to work, you can raise your family, take your son to baseball practice, go to the bar with a friend, whatever. Okay, you can do whatever you have to do. And you know that if you tune into Freeman, he's going to let you know what's happening in the stock market, what's happening with oil, what's happening with any conflict overseas, what's happening with crypto, where Bitcoin's going, the best altcoins, everything. I'm trying to be the most comprehensive financial page on YouTube, on X, and that's exactly what we do here. If it makes money, it makes sense. But let's dive into it, guys. We got a lot of comments coming, so we're trying to get to as many as we can. But let's take a look. BTC down 3.7% on the day. ETH down 5.25%. Everything else just kind of, you know, trucking along in there. Zcash even for the day. BitTensor pretty even for the day. Ondo down a little bit. Algo up 5% on the day. That's pretty good. Kaspa down 8% on the day. Maybe it's my video I released. Maybe people sold on the video. They didn't like it. I don't know. But BTC recently took a little dump. Guys, I've said this time and time again, you know, the world of finance is all interconnected, right? So if your dream is to make it in crypto, your dream is to make it in stocks, your dream is to make it in commodities, you got to know all of it because everything affects everything else, right? Oil affects stocks. Stocks affect crypto. And I can look at this chart right here and tell you what I think is happening with the S&P 500 and the Qs, right? The NASDAQ, which is the tech stocks in the, you know, stock market, that's what BTC trades like, right? So I can tell you right now, the NASDAQ's down. Oil is probably up, you know? And we had a target over here on our oil trade. Well, we don't have a trade, but from 118 was a technical target for inverse head and shoulders right here. And it has broken out of that, guys. I try to keep y'all as up to date as I can here, but we do also have a Discord group. It's very cheap, less than $2 a day. There we cover all my perpetual futures trades, all my spot buys. I was buying things this morning for my IRA. It's just the most comprehensive finance thing. We bought meme coin recently. I mean, it's just, if it makes money, it makes sense, right? And we make some money over there. So that's the plan behind all of that, guys. But we're going to be covering the FOMC meeting today. And right now, I mean, there's zero chance of a rate cut, right? That's not what we want to watch this to see. What we want to see is the tone, the outlook, okay? If they have a summer of economic projections or if they comment on that. And the reason is this is Jerome Powell's last FOMC meeting as the Federal Reserve Chairman, okay? Kevin Warsh has been confirmed, or it looks like he'll be confirmed. So he will be the new Fed chair. But, Trump wants him to come in and cut interest rates. That's not what he should do in terms of fiscal policy. Inflation is still higher than normal. Job market is hurting a little bit, but not falling off a cliff. And oil is just making inflation that much worse. Like if back here at $65, $70 a barrel, if we were at high inflation, what do you think a 2x of oil does to inflation, right? And that's why relatively I haven't been bullish on the market, even though stocks made new all-time highs. I think it was a lot of hedge funds, a lot of gamma protection for stock options, essentially. Wasn't believing it. I'm still not believing it, and I'm short the market. And so if we come up here and we look, this is the Semiconductor Index, the SOX, and this has, all the chip companies, right? Semiconductors. And if you take a look at this from the low that was formed March 30th, this was when the ceasefire was announced. Okay. Well, since the ceasefire being announced, this is up 52%. Guys, we're not talking about meme coins here. We're talking about stock market. Okay. Up 52%. And when we really come in here and look at where we are today, okay, we've got higher oil than we had back then, okay? And remind you, this green line right here was the previous all-time high at 370. It beat it by $100, okay? So let's just have a little bit of a thought process. Let's think about this, see if it's logical. Okay. Back here, the market thought it was overvalued, or they wouldn't have sold it, okay? And so the market thought it was overvalued over here, okay? And if we just do a little drawdown, we could see that's about 25% from where we are now. So 25% drop, 21% drop would take us to what was considered the fair value for semiconductors at all-time high. Well, so let's see what's changed in the market. And remember, guys, even if you're only into crypto, trust me, if this goes down, crypto's not going up. This is a unified market. And so let's think about that. What has changed to make us bullish? When we come over here and we take a look, this happened because a ceasefire was announced with Iran. And the Strait of Hormuz was supposed to be open. Okay, that's about 20% of the world's seaborne oil goes through there. We're in the worst oil crisis we've ever had. In modern day history. And so let's take a look at it. Let's fast forward a month. Okay. That's about what this is. Let's fast forward a month. This was March 30th. Now we're sitting at, April 29th. So when we take a look at this, this was today, about an hour ago. Trump will maintain the naval blockade on Iran until a nuclear deal is reached. The last report that we had was that Iran just wanted to open the strait and said, let's deal with the nuclear stuff later. Will maintain a blockade on Iran until nuclear deal is reached, rejecting Tehran's approval. Okay. The proposal that he rejected was about just opening it, no real negotiations. But look at this. President Trump rejected Iran's proposal to open the Strait of Hormuz, and U.S. has prepared a plan for a short and powerful wave of strikes on Iran, per Axios. Details include Trump says he will keep Iran under naval blockade until they agree to a nuclear deal. After the strikes, which would likely include infrastructure targets, the U.S. would press Iran to negotiate again. Trump sees continuing the blockade as his primary source of leverage. Trump said Iran's oil storage and pipelines are getting close to exploding because Iran can't export oil. Brent crude hit $120 a barrel. This is huge. You know, we've reached gasoline prices that haven't been seen since 2015. I remember when I was young, you know, I'm 31. I'm unk, guys. I'm unk. I remember back in, probably 2007, 2000, maybe. You know, I'm sure it would have crashed there. I'm sure oil would have been lower during the housing crisis. I have to look. But, you know, I remember when gas was like $4 something a gallon. And now it's, you know, I have a Tesla, but because it's awesome. But my wife has a minivan that's gasoline. And, you know, gas at Costco, man, was like $2.25, maybe $2.25. There's rumors that, or actually not rumors, I've seen it on Tucker Carlson's podcast, that over in, was it Finland or Ireland? They were paying like $15 a gallon for gas, and heating oil to heat the house was enormous prices. So this is hurting European countries and Asian countries a lot. So guys, if any of y'all are there in Europe, in Asia, you know, sucks. No, I'm joking. No, like, you know, I'm sorry. You know, it's not a good situation to be in. But again, so what has changed? We've got twice the price of oil. The ceasefire seems to be nothing, that we're going to be going back to conflict. You know, every day that the strait stays closed, it's like 2-week delay. I mean, you've got to restart up refineries. You've got to, you know, it takes 4 to 6 weeks for oil to get by ship from the Strait of Hormuz to where it's going. Right? And so even if it was fully started up today, it would take a month to start up refineries if they didn't have any problems. It'd take another month or two to start shipping stuff, right? So this is not a very quick process. Yet, we're hitting all-time highs in the stock market, right? So I'm not believing it. This is what I'm tracking right here. I may change my thesis if this changes, but you can see right here, we're on the hourly chart right here, and we did this in the Discord Friday, so we got like the Pico top. You can see right here, we got above the 50-hour, you know, the day after it bottomed. Okay, got up, tested it right here, tested it here, tested it here, was above it the whole time. You know, and you can always tell a important level when you drop through it with pressure. You see that? You see that red candle? That wasn't a little doot, 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 you know? It was something. And then we came down, and like I told y'all yesterday on stream, I said this yesterday on stream, if we came up and rejected off that line, that would be bullish, a place where I would potentially look to add. I decided not to add. You know, this is triple levered inverse ETF. I've got about 2,000 shares, about 26K worth, about 75, 80 grand worth of short position, essentially. You know, and there's a lot of power in it. Like, say that was a blow off top and we go into a low, you know, like, look at this. Like, this is where it was at the bottom, you know. So, I mean, if this just goes back to there, That's a $35 pump. That's 72,000 in profit, So it's now there is decay with some of these ETFs, so it might not be just that high. So it's not, you'd have to do a little research on that. There's a decay, it resets daily, but still there's a lot of, money to be made if the market goes down. And so right now we're kind of the opposite, right? We're falling on this line on the inverse ETF as support. And over here, we're facing it as resistance, guys. Now, just a reminder, everything I share, I've got a very high risk tolerance. Nothing I ever say is financial advice. So always do your own research. Don't listen to some random dude on YouTube that drinks instant coffee. Okay? My wife drinks Nespresso. I did the math on those daggum things. It's like, dude, how many does she buy? 36? It's like 40. Man, it's like $1.50 each one of them. $2. I'm like, golly, you drink like 3 of those bad boys a day. And so I'm over there thinking, hell, I ain't going to drink these. That's expensive. So I was like, Costco. I found some Nestle espresso coffee. Very good. Fine grit, man. I got a water cooler in the house. I'll put like 3 scoops in here. Go put some hot water on it. Mwah. Saving money. Like, I'm not broke. I'm just cheap, if that makes sense. Like, I have no problem buying a Rolex. I have no problem buying an asset. I'll buy meme coins. I'll buy short stuff that's very risky. I've made tons of money trading. I've lost tons of money trading. I've got a very high risk tolerance, but I'm not one to spend money on things that I don't get like a ROI on, right? Like, we redid the floors in our house a couple years ago and I spent like $30K doing it. And my wife was like, hey, maybe we change the floors. I was like, no. She's like, well, you're going to buy a watch or you're going to spend money on this or that. I'm like, yeah, but I can recoup that. Like, I mean, it's recoupable, I could sell it. Like, I can't sell these daggone floors, And so, yeah, it's just funny. Let me know how y'all are. Let's get to some of these comments, guys. Happy Wednesday, fam. Cloud Deli, day one supporter of Finance Freeman. I thank you with all my heart for the support you give us. Buy or sell gold. I don't know if I'd say sell. We can look at it. Let's come. And guys, by the way, this is Blowfin. They are our official stream sponsor. If you're looking for a new exchange that has crypto, stocks, commodities, then Blowfin's one that I personally use. There's a QR code on the screen. You can also find a link down below in the YouTube description. But let's come over here and look gold. What is it? XA? Yeah, there it is. Okay. Let me break it down. And this is a really good example. So thank you for asking this question. Buy or sell gold? Because I want to explain how money works, right? How, if you're only into crypto, you need to pay attention to stocks. If you're only into stocks, you need to pay attention to bonds and gold. And you need, let's take a look at this. Okay. Let's come over here and take a look at the Dixie. This is the US dollar index. Okay. And so let me bring this all together for you. I have a tweet that you can find that says gold will top when the Dixie bottoms. Okay. April 17th. Let's find April 17th. Oh, that was last year. This don't go back that far. But here, I want to go long time frame. Dixie. Let's pull up gold over here. Okay, let's go look here. All right, this was January 28th. Let's go look at what the Dixie was doing January 28th. Okay, you see this? And I have a tweet you can find it, guys. That's why I totally recommend the Discord, guys. I try to teach people stuff like this. I said the gold will top when the Dixie bottoms. Now, why is that? Why is that? It's because gold is a hedge against the dollar. And so if the dollar is losing value, you need more of those dollars to buy the gold. Okay. So gold went up, the dollar went down. Well, why is the dollar going up right now? Well, we have what's called the petrodollar. So if we come over here and we take a look at oil, all the unsanctioned oil around the world trades via US dollars. Okay. And so let's say that, let's just pick an arbitrary number. Okay. Let's say there was 300 units of oil a day. It doesn't matter. That was used globally. Okay. Just say it. 300 units, whatever, a day. Okay. And let's say that oil was 60 a barrel. Okay. So let's just use this as an example. Okay. Well, that right there is a certain amount of dollars needed in the world. Okay. Well, what happens when this stays the same and this doubles? Well, this dollar has to double as well. People need twice the amount of dollars to get the oil. And because of that, it strengthens the US dollar. So if we come over here to the daily, we can see that, let's go to February. So February 28th, when the conflict started, which was right here, the dollar was 97.4. It hit as high as 100.5, which correlated with up here. And so you could see how all markets are connected, right? That's why when people just look at crypto, you're missing 90% of the picture, right? If you're thinking crypto is about to take off all in of itself, you're wrong. You know, and it's a good way to save money. You have to understand finance, which is what we try to do here at Finance Freeman, is explain finance as a whole. I love crypto. It's changed my life. But we have to understand how finance works. And so to answer your question, it's a couple parts is what you need to answer this question. The first thing I would ask is not so much, should I just buy gold? Is gold a good deal right now? Maybe. You know, I mean, our company or our country is going to keep printing money forever and diluting our money. Yeah. Like it's never going to get better, in my opinion, you know? And so, you know, is gold being down, 20%? Is that a good deal? Well, if you thought it was a good deal at 5,600, then yeah. But the question I would ask myself is, do I think the dollar goes up? Because I know if the dollar goes up, gold goes down. And then I will look historically, what are some highs of the dollar? And where are we at in terms of that? And so you can see we're kind of the midpoint for the dollar. If we go back to the 90s, if we come up here, we put this here, and we put this here, you can see we're right here at the midpoint, right? It's been as low as 71. I think that was during the housing crisis. And then, as high as this during the dot-com bubble. Interesting. Elevated oil always precedes a recession. Okay. We've had some technical recessions, but we haven't had a huge capitulation since dot-com bubble. Okay. We did have the 2008 housing crisis. That was bad. But that was a little different than a complete market turmoil. We had the thing during the illness, but that was, we shut down all the businesses and stuff, right? And so I do not think oil is going to come down a lot. It'll find a price, but I don't see this conflict ending very soon. Even if it does, I don't see oil manufacturing resuming and exports resuming normally for a while. So with that being said, I expect the dollar to go up. Okay. And since I expect the dollar to go up, I expect gold to go down. Okay. I joined because of your thumbnail. Cool, man. Thank you. Thank you. It's hilarious. Man, it's crazy what artificial intelligence can do. I used to pay $30 a thumbnail. Now I pay a subscription for $20 a month and I make them with 2 prompts. But yeah, we got about 18 minutes, guys, before Jerome Powell will be up speaking, and we will cover it. But yeah, so with something like gold, if you go back to crises throughout history, like if we go, let's go to like the weekly. Let's go here when gold ran up. You could see gold ran up about a 7x. Okay. If you look at from the lows, get that crap out of here, man. What is that? From here, gold ran up about a 5x. Okay. So actually less than it did leading up, early 2008. If we draw a fib on this, it retraced to about the 0.5 fib level. That means a 50% retracement of that pump. Okay. If we come up here and we draw a fib level, a 50% retracement would take it to 3,600. You can also see that a lot of times after these big blow off tops, we at least come back to meet the 200-week moving average, which is all the way down at 2,600, right? So gold could definitely capitulate a lot, but I definitely think we have to think of things as a complete financial market, right? You can't just look at gold. You can't just look at Bitcoin. You can't just look at the S&P. We have to understand how money works as an ecosystem. And whenever you understand how money works, then everything makes sense. You see something going down, you know what else is going to go up. You see something going down, you know why it went down. It's very different, guys. That's why I definitely, I know I've said it a couple times, but definitely recommend the Discord, guys. It's like, I think we got it at like $50 a month right now. We cover everything: stocks, crypto, bond market, IRA. Like I bought some SoFi this morning. I think SoFi is going to go lower, but it's in my IRA, which is, I'm 31, so I got 30 years. So it's a DCA, but I bought 500 shares of SoFi. I put it in there, bought a meme coin, put it in there, and so it's definitely great. You can find it in the description on YouTube, and soon I'll make a post and pin it on X. But yeah, leading up to what we got going on with the FOMC meeting, the chance is 0 rate cut. I don't think anybody's thinking there's going to be a rate cut, right? There's no reason to think of a rate cut. But the tone is what we want to listen for, right? We want to listen to the tone. We want to listen to the forecast. If we come up here, we're April of 2026 right now. If we go to April of 2027, you could see we're currently 350 to 375. Odds are we are still at the same interest rate a year from now. Okay. Then if you want to look at the next highest probability, the next highest probability is that we are higher rates, and so do you scalp or more of a swing trader? Yeah, it's a good question. I have a lot of people ask me, or I'll post something that say that's not investing. I'll say, no, it's trading, or, and they're two totally different things. A lot of people, get this mixed up in their head, right? I am a investor, but I also trade, right? Like I mainly trade my personal portfolio, I guess you can call it, but then I have an IRA that I invest in. And I would say I'm more swing type trading, right? I like to be on at least the hourly chart, like whenever we're looking at this SOX right now, I don't want to try to necessarily time the absolute top. Like I would even be okay making an entry here now. Now we did time the top. We got in Friday at market close, so we got in like right here, 465. It went to like 468 in pre-market on Monday, and then it's just been printing ever since. But you know, something like this is an ideal setup for me. You know, I identify some type of metric that I'm looking at, which in this case is if we look right here at this blue, this is the 50-hour moving average. And we can see that once we broke above it, we never went below it on the semiconductor ETF, right? And when we broke below it, we broke below it with force, which means it was a pivotal level. And now we're up here getting rejected off of it, right? And so a trade setup like this is fairly simple because you have entry and you have, stop loss, right? You're not like aiming in the middle, like, oh yeah, let me throw a dart right here random in the middle and cross my fingers. And yeah, you got to have a little bit of you got to have a plan, right? And you got to be able to cut losses. You've got to be okay taking losses. Like, you've got to be okay being like, hey, I lost 3% of this trade. I lost 5% of this trade. But you have high upside, So like if we just look at this trade, for instance, this is the semiconductor index. It would not surprise me to make new lows. It would not surprise me to see us go into a technical recession. It wouldn't. I don't mean to sound like a bear, but we are frothy. Okay. And so something like this, and guys, I could be completely wrong, but minimum, I would think a 0.5 fib level after such a huge run, but the 618, the golden pocket right here, 618 to 65 makes a lot of sense. That's also meeting up with the previous all-time high. Let me change that. So yeah, that that level makes sense. But that's a triple inverse ETF, right? And so it fallen 18%, that's what? If it falls 18%, that's a 54% gain, I'm trading about 80 on it. That's a new Daytona or a new car, and so yeah, I think it's all about risk reward. Man, I've never used Thinkorswim. I've never used it. I have friends that use it. My mentor used it. I actually have a mentor that used it. But I personally haven't used it. And I don't do a lot of, I don't even have TradingView connected to my my exchange. I should, but I'm not doing really, I prefer more swing trade. Like, I'm too busy, man. I got this media company. I'm full-time making content. I'm always on the charts, but I'm always doing something, right? Updating my Discord, making a video, recording content, doing research, something, right? And so I can't just be zoomed in on a chart all day, right? Now I'll look at it every hour, but I can't be, so I'm not trading like the 5-minute candle, anything like that. I'd much prefer to like swing trade a couple weeks, right? Like, say I got in here, say we came down here, we bounced. Okay, I identify a crucial level right here. I can move my stop loss up to here. Say we come down here, boom, boom. I identify another level. I move my stop loss down, or if I'm okay, I take profit, whatever. But I'm also a conservative trader in that. So like, once I get into profit, I move my stop loss to break even. Once I get into more profit, I move my stop loss to in profit, if that makes sense. And yeah, but I'll show you guys real quick. Bow, bow, bow. This is the number. Yeah. If you're ever interested, I should probably promote it more, but it's just right here. I should update this, what it says. It's kind of out of date. But yeah, But that's it. Yeah, we got a good group. We don't really promote it much, but I can tell you I'm really about educating people, not about, this is what I'm doing, you should copy me. Like, it's never financial advice. Like, but it's kind of that old adage, like you give a man a fish, he eats for a day, you teach a man to fish, he eats forever, right? And I used to teach at the college. I created a class before about analytical. I was a chemical engineer in analytical. And BTC getting beat by redhead. I mean, it is a redheaded stepchild, right? It's like a stepchild of the NASDAQ, right? And I had a guy the other day, well, prove it. How do you know it just follows it? Well, dude, I'm on these damn charts all day, every day of my life. Like, it's what it is, man. Same thing. Same setup on the Qs. You see we broke below that. And the only reason I'm shorting the semis other than indices, one, man, I don't like shorting the S&P. I don't like shorting the Q. I mean, Qs are different because they're all tech, but the S&P, tech could be selling off and people could rotate into, software or something else. And it's like the S&P's up, but what I was targeting is down. And so I like going after single stocks or ETFs around one sector, right? Because sectors do tend to sell off together. But you can see the Qs were up 20%, semiconductors up 50%, right? And so we've got a lot to look at today. We've also got some really big earnings coming out. We got Google, Amazon. Let me think. Google, Amazon, Meta, and Google, Amazon, Meta. Daggum, I'm forgetting one. Apple, all coming out today for the Max 7s, right? And that's what's been keeping the market propped up for the last year, is them saying, hey, we're going to spend an enormous amount of money on artificial intelligence. But, man, I believe it's bubbled. The last time that we had this type of run up on semiconductors was the dot-com bubble, right before the dot-com bubble, almost like identical to what we see now. Now, people argue and they say, well, it's actually not valued that high if you look at it on forward PDE ratio. It's like 25, 26, and that's true. But if you look at past PDE ratio, it's all-time high. And so, of course, they've got to be bullish and have these good price outlooks, right, for these companies. But, when you're looking at PDE, it's price over earnings. And so you're hoping those earnings stay there. And, I think we're in this K-shaped economy and the everyday person is hurting. I posted this. I said, I made a 3X on RAM. About a year ago, I paid $350 for this for my PC. And I did. I've got it right here. And I never installed it. And it's worth $1,000 now. I said, not selling. We'll hodl until 100X. But I was just joking. But I need to install the dang thing. But, let me show you something else that, SoFi, which you got to think, Robinhood and SoFi, these are normie retail, me and you trading applications, right? I use Robinhood. I've got my part of my IRA on Robinhood. I've got a lot of it on Fidelity, but that's a good measure of normies, right? In my opinion. And yesterday after market close, we had 2 earnings come out. We had Apple's tomorrow. Okay. Yeah. I was getting them. I knew we had Meta. I knew we had Google. But yeah, so we got Apple tomorrow, which Apple, the chart looks like it needs to go down a little bit, if I'm being honest. Google and Meta look pretty good. But I don't know. I think the market's looking for a reason to sell off, if I'm being honest. Like, you're gonna have to blow something out of the water. Like, I just think to be cautiously optimistic. A lot of people get uber bullish at all-time highs. But I don't. I get more bearish the higher we go because the money's not made when you sell. The money's made when you buy. You know, people see a stock down 50, 60, 70%. They see Bitcoin down 60%. They're like, oh, man. But at all-time highs, they want to buy, right? And the money's not made when you sell. The money is made when you buy. And let's watch this real quick, and I'll explain my thesis. We only got a few minutes before Jerome Powell. Perfect explanation of our current economy. We are hurting right here. Robinhood earnings, missed earnings. That's because people do not have money on Main Street to invest from their paychecks, from anything. Visa beat earnings. That means people have more debt. They are using their credit card more. That is the perfect explanation of this K-shaped economy. Yeah. So that's kind of my, thesis of it, is that, Robinhood missed earnings, SoFi missed earnings, not by a lot, but by a little bit. But overall, people don't have extra money to invest, right? Even this recent stock market run we had up, it was very low volume. This was not on retail piling in. Retail's probably piling in now, thinking they're buying the dip. It was like hedge funds buying for gamma support and stock option hedging, in my opinion. Caterpillar is also tomorrow. Yeah. I mean, yeah, it's kind of the picks and shovels. Like, even though it's not necessarily like the picks and shovels, that's foundation. If there's a lot of building going on and stuff. One thing that's been struggling lately is Netflix. And, this is one that I bought a little bit in my IRA. I wouldn't mind buying more. The chart could go lower, and it might go lower. But if we do go into a recessionary environment, I think it could be good. Because if daddy can't afford to take his kids out to Dave & Buster's or to Chuck E. Cheese or to these places every week, because money's tight, well, what he can do is he'll find $28 to buy a Netflix subscription and buy a little bit of popcorn and, a candy bar to watch at the house. I don't know what music that is. I don't want to be striked for something. Okay, guys, let me know. Is he going to start with good afternoon? But I appreciate the, he'll definitely be on time. Is he going to be late? Let's see. Dang, this dude's never late. But I will keep y'all up to date with what's happening. We're going to pull up a couple charts here, and I'll flip back and forth. We'll pull up the S&P 500, which it broke out of this upward wedge. We will pull up SOX Semiconductors, because if that short goes bad, I'll be homeless. I'm just joking.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American.
Let me know if you can hear good.
The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the
Duh.
current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals.
That goal's never going to be
Developments
reached.
in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest.
He's basically saying you
Our
can't just
collaborative
cut for any
deliberative
reason.
Process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas.
So Trump's DOJ or whatever wanted an investigation into him for all the money that they were spending at the on the new building, but they said they wouldn't confirm him, Warsh, if there was an ongoing investigation.
Carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Markets.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy.
There's a lot of
that they can depend.
It's a big deal. The world looks at the U.S. dollar as the global reserve currency and accepts it as the petrodollar because there's a confidence that monetary policy is independent of the government, right? And the worry is that Warsh gets in there and slashes rates because that's what Trump wants, and they want to balloon this market. But if that happens, there's going to be a ton of confidence lost in the independence of the Fed. So as much as I want my bags to print, I want the United States to still be the world reserve currency more than that.
When I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned,
he's able to be there.
I think March of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have I think left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors
Trump appointed
Jerome Powell also the first time. As a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March? before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change. So measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert. And monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even talk about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut. That number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision.
Getting some candles down, guys.
The majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, it's a
Guys, if you appreciate these live streams, I'm live every day, 12 p.m. Central Standard Time. Please subscribe over on YouTube and follow over on X.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. The majority are still on the page of not feeling the need to move to that level, and I that's where I am. I get it, though. At a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools? So
I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things. And if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Hi, Chair Powell, Neil Owen with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. The last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. We were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market? And should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out. And it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very similarly all over the world. It had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced.
I wish I could go back knowing what I
it's
know
always
now
been a
to when they were doing all that quantitative easing. Boy, I would make
you've got to be strong on both of our dual mandates. And we for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
Just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you want to make them in a way that will be sustained and continue to make sense, and not something you need to take back, fairly quickly. So I think a group of us, including me, didn't feel like we needed to be in a hurry on that markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument too, as I mentioned. It's a perfectly good argument to be having, good discussion to be having. So, and it came out the way it came out.
Well, you've got 3 dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the FOMC, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Howard.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can. Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do. The shadow chair thing. No, I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know it, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go, and if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation?
Those prospects are real. Remember, though, and they're real. And the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much that, how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet. And it's so unknowable because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know until we know. So fortunately, we're in a good place to wait and let things develop.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting as opposed to the ones with just with SEPs. Can you talk about why you see that as a net positive?
So we always said when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting and sometimes between meetings. And doing that with our press conference, I think would have been quite challenging. It's become the industry norm. It's the standard. I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to. And I do think it's quite helpful to I try to deliver a message on behalf of the committee rather than 18 other people going out and delivering their message. And it's going to be all over the place because we do thankfully have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate?
This is the
last year,
first
what
time
changes
since
were considered, what you
1992 that there's
wanted,
been
and what
4
prevented
dissents,
action,
which is
any action,
disagreements. 3 didn't like the
on
language,
those
and
changes?
1 didn't like.
Yeah, I'm not
One
gonna go into the
wanted
real
to cut.
small specifics, but what we found very quickly was that making changes, making really large changes, for example, to the dot plot or the SEP, it didn't have. We couldn't come up with anything that had really broad support on the committee, and so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And we've looked at a bunch of things, and it's something. Like I said, I think every new chair is going to look at our suite of communications, and think about what would be changes. We are the only major central bank that doesn't publish a forecast, and that's because we have a 19-person committee, and you try to do it. You try to do that at the board. That's hard. At the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on Mike's question about hikes, are we right to assume that the hawkish outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then, or if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now, so it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s, the effects on the United States are really substantially less than those of Western Europe or Asia, feeling much greater effects from these things. The effects we're feeling in the current situation currently, and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. And those hikes may continue to happen. And other things are going to start to reflect airline fares I mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it, between 3% and 4%. We're a little north of 3.5%. So that's well in the range of what I would consider a reasonable, but at the higher end of the range of what I would consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit. And I don't think there's much of a case for any case really for policy looking, meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on some of the other questions about your future a little bit. The first time we've seen 4 dissents now since October of 1992. Are you handing off a divided Fed?
The thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good, and we're in an unusually difficult situation. So we've really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every supply shock has the capability of driving inflation up and unemployment up. And what do? The central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those 2 goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. You got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. People are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising. And I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets. So they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
And the message it sends to President Trump by staying on?
I'll stand on what I said earlier.
Victoria. Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
Well, it's to a significant extent, it is the law. And, we've had to go to court to successfully so far to defend it. But, the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law, but it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day, but it's more than just monetary policy. We don't want to use our tools we haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks that would be good to repurpose those to serve other purposes, but that's dragging us into politics and into fiscal policy. So we've resisted that.
Well, and maybe another way of asking it too is, do you think that Fed independence is as strong now as when you became chair? And if so, why?
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about. And we've had to do that, and we've been successful so far, but that's not over. None of that is concluded yet. And it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it, and I'd like to think that we can get out of that era and go back to respecting, what the law says and what custom has been, which is to, let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect for perfection, but do expect us to make, decisions without political considerations and the very best analysis we can bring.
Katerina Saraiva, Bloomberg News. How would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have, talked to you about?
So I think that I don't want to report on what my colleagues think. They can speak for themselves. But there are widespread concerns that these things may continue. That's all I'll say. And and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. What, do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to, to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient And Chris in particular, Chris Waller, is particularly passionate about that. Of course, so are the reserves, so are the presidents. And, it's a question of how do you accomplish it? We of course, and Chris said this in his speech, we want 12 strong independent central banks with their own staffs and their own monetary policy views and all that. But, there are things that are done in all 12, which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page. The other thing he touched on was the idea of removing Reserve Bank presidents from office over different views on monetary policy. And I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine. Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy. When the history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
I'm going to just say
I think they're going to put a crown on me.
That's for someone else to say. I'll give you a mulligan on that.
All right, I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like inflation has not been under control for them really since the COVID reopening?
We're committed to bring inflation back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting these events keep happening, which keep driving up costs, and the best thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that, but we try to get there over time in a way that does the least damage possible, and our commitment to that is never ending and unshakable.
How would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of the blows.
I don't know that you can be awfully resilient. So it's actually quite resilient, I would say, because it's a positive thing. If I can have that amendment, yeah, growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. The most recent data are good. And some of it is just the apparently insatiable demand for data centers all over the United States. So a lot of business investment going into building data centers, and every reason to think that continues. So you've got an economy that's growing at 2% or better. PDFP, which is private domestic final purchases, which is really a better signal of
market likes
of a momentum in the economy, is actually higher than that. So that's a positive thing.
We'll see if it makes it over this.
If you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs, because quits are really low, hires are really low, and there's effectively no new net job creation. So that's
Fox is trying to make it up.
In a sense, the labor market is in balance, but it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job.
Yeah, guys, if you appreciate this, please subscribe over on YouTube, follow over on X.
It's partly tariffs, which we think that inflation should subside over the course of this year, because it's kind of a one-time increase. It shouldn't be repeated, and that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly. And we'll just have to see how that works out. In the meantime, we think our policy stance is in a good place for us to hold and wait developments.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing bias in the statement. And you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes if that was needed?
So I think that, the center is moving toward a more neutral place. And that's sort of what markets are saying too. I just think, there's a lot of signaling going on when you change guidance like that. And so we just, I guess a majority of us didn't feel like we needed to send a signal on that right now. But maybe it'll come to that. And the reason is because, we're kind of waiting to see what happens with events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it. And of course we will move to a hiking bias if we want to hike, and we'll move to a neutral bias before that. But there was a difference over whether to do it at this meeting, at a meeting at which all but one of us agreed that the rate decision was correct, which was not to move.
And you just said a moment ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
I want to stay until I will stay until I feel it's appropriate for me to leave. And yes, that is really what is driving this. I'm not looking to be, a high profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional.
I wonder if Trump's going to come out talking about firing him or something.
Working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan, CNN. You've made many tough decisions in your time at the Fed. And as your time as chair comes to a close and you think about your tenure and perhaps your legacy, are there any decisions that stand out as ones that you're particularly proud of? And are there any that, with the benefit of hindsight, you would take a mulligan on?
Yeah, it's hard. I wouldn't want to single out individual things at this point. I'll just say, we, all of us together, have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us. It's been very challenging because we've been in a situation of supply shocks really for 6 years. And that's just a very different situation than for a very long time. What the Fed and other central banks were doing all the time was demand management. And, and there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And by the way, central banks that have an inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging. And we've tried to do our very best through these really challenging times. And I'm really proud of the work that I've done, that my colleagues and I have done during these years.
Now, to follow up on some of the discussion around Fed independence, can you explain to the public why this notion of Fed independence, which might sound kind of wonky to some, is so critical? I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
So every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So after literally centuries of experience with that, the whole world moved to the different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had the pandemic, inflation everywhere in the world, and now we have inflation that had gone pretty much all the way back to target, really close to all the way back to target, and now is being buffeted by the energy shock, and the U.S. buffeted by the tariff shock as well. So, but what I would say to the general public is that's the backstory, is that don't think about an institution being independent. Think about it this way, that you want people to make monetary policy and set interest rates to benefit the general public and to try to achieve economic goals, which are maximum employment and price stability, and focus only on that and ignore political considerations completely. Ignore them. This isn't bipartisan. This is nonpartisan. So we want to just work directly for the American people doing these things. We don't think, oh, I want to do this because the president says it's a good idea, or because there's an election coming up and I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us, and our ability to control inflation and have any respect would be gone. And let me say, whatever people say, the markets believe in that we will produce 2% inflation. If you look at longer run expectations, markets believe that there's no sense in which our credibility in the markets has weakened. It's just not the case. It's people do get it, that this is our commitment and that we will achieve it, and it's priced in. If you disagree with that, then you can go ahead and bet against the markets, but the markets are pricing in Fed credibility.
Okay, we'll go to Richard for the last one.
Thank you, Chair Powell. Richard Escobedo with CBS News. We talked a lot about gasoline prices and even you mentioned airline ticket prices, both of which are up dramatically because of the war in Iran. And so I wonder, are you seeing that weigh down consumer spending in other parts of the economy? And if so, how worried are you that that will be a drag on growth?
You don't see it in spending yet. You really don't. I mean, as one of your colleagues said, the economy has been resilient. It really has. Not just this time, but it's been remarkably resilient for some years now. The U.S. economy has just powered through shock after shock, and consumers are still spending, and that's what the banks will tell you, credit card companies will tell you, the retail sales numbers that we got most recently, people are still spending. And
you've seen Visa beat earnings
in a world where if gas prices are go up much more, that's taking otherwise spendable money out of people's pockets. But right now, we don't actually see much slowdown in yet, certainly none from this. But you think logically you will, because people have a certain amount of money to spend. If they're spending 25% more on gas or something like that, then that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern, and whether or not that might push up inflation?
So all of those things are in the models that we use to calculate inflation. So they're just parts. You can ask about anything like that, and they have a place. The staff has a place where they're looking at that and pricing in what will happen with higher prices and that kind of thing. So it's there. The effects are not that big yet. We're a huge economy. The import sector is only 10% of the economy. So we're not like a European country where 50% of the external of the GDP is in the external sector. We're also, as I mentioned, we're an oil exporter. So we're not feeling the same kind of pain, and we're not likely to feel the same kind of pain that economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone. I won't see you next time.
Well, let's take a look at how markets looked. I'll give you all my take, guys. I hope y'all enjoyed that. Please subscribe and follow us over on X. This is the SOX. It looked like it was trying to break over that average. Not doing it. This could potentially be an ugly cup and handle, which would take it back up to about this all-time high. I would definitely add position there. I don't know. The spending has, like he said, been still there. But, I mean, everything costs more. I mean, people have to live, and you see Visa beating earnings, which tells me people are spending debt. SoFi and Robinhood missed. And excuse me, how long is oil going to stay elevated? I have this set up on the bodies of the candles, not the wicks, if you see, and potentially rejected there on the SPY. Let's go look at oil through USO. Wow. Oil is over double from where it was when this started. And so the longer this takes place, it's gonna drag on this. Guys, we've got some big earnings tonight coming up, which are the hyperscalers, what has been pretty much financing this economy for the last year. And let's go take a look and see what the masses are saying about the FOMC meeting. And yeah, make sure you follow on X. After there's earnings, I'll have some shorts coming out talking about what the earnings per share was, what the revenue was, if they beat, if they missed. I'll let y'all know all of that. So SOX is coming up. Let's take a look at NVIDIA. Because NVIDIA was lagging. It was lagging behind all of the other semiconductors. And then it started coming up. One hour. About to have a cross between the 20 and the 50. That's not really that significant, but. Okay, so the line it's coming up to, this is a pretty big resistance for NVIDIA. If it breaks that, that'll be major. So this is the previous all-time high. Also this downward trend line, right? So we'll see if it tries to make a push up there. You know, we're 30 minutes away from these earnings coming out. So big, big, big thing. Market would lose faith if Fed made political decision. Yep. Powell, every reason to think data center demand continues. Would be good if half the data centers under construction hadn't been delayed or canceled. So let's look at this. Announced is in yellow. Construction is this turquoise color. You know, and I'm really interested to hear Meta and Microsoft. Yeah, Microsoft, that's one. Microsoft, I think they're both today. I'm interested to see because they both announced, Meta announced which is the company behind Facebook, announced about a 10% layoff. And Microsoft announced a 8-point-something% layoff. And so obviously this money is needed for scaling or something. But is it going to show up in any of the numbers now? You know, like, is it going to show that potentially, I mean, I don't expect them to miss earnings, but could it potentially go into that, or does it go into projections? Like, where are those numbers coming from? The need to cut right now. You know, if they're making money hand over fist and had the financing, then I don't think they would. I mean, 10% layoffs are big. Yeah, shout out to whoever said my thumbnail was funny. I appreciate it. It's let me see. If you're over on X, you can't see it, but I don't know. I don't think y'all can see this. Let me do something real quick. That. What do y'all think? FOMC live. Your boy Freeman, Jerome Powell, sell Trump pissed off in the background. I thought that was funny. I thought that was a good one. Okay. That back. Retail has created its new momentum darling, 3x leveraged semiconductor ETFs. Retail participation in SOX 3S and SOX XL has reached the 97th and 99 percentiles on a 5-year look back. Yeah. I would be interested which one's long, which one's short. Bonds are going up. 0% chance of a rate cut next meeting.
That's an interesting question. You know, coming from you, that's very.
But which war do you think ends first?
That's an interesting question. You know, coming from you, that's very interesting. Which war would end first?
Dang, the fact that he even...
Maybe they're on a similar timetable. I think Ukraine, militarily, they're defeated, okay? You wouldn't know that by reading the fake news, but...
Wow, he said Ukraine and this conflict will end at the same time. It's pretty crazy. It means this one should last a while. Can you explain what it means interest rates unchanged? Yeah, so it's the cost that banks borrow money, essentially. And so if they borrow money at 4%, they're going to lend it to you at 6%, right? They got to make money on it. That's essentially, easiest way to think about it. And so if rates are higher, that means money is more expensive. If money is more expensive, that means people won't borrow as much. They won't buy housing. They won't potentially take loans for risk assets. When interest rates were 0% a few years ago, it was essentially borrowing free money, right? So why wouldn't you do that and buy risk on assets that could pay you a good premium? You also have competitiveness with higher rates taken out of risk assets, because when you have higher rates, treasuries like T-bills offer more. And so if you're going to get 7% year over year, 8% when we're at all-time highs on the S&P 500, maybe that has a little bit of risk. But what if I can go buy a treasury for 4%? Maybe that's risk-free. Maybe that's better. And so it's just the higher rates, the worse it is for the economy, for fiscal markets, for things like that. So for the markets, we would want lower rates. Iran says revenge for the martyred leader remains in place. Okay. In a couple years, you'll probably look back and wish Powell was still there. Yeah, that's major, guys. I feel like we feel a little frothy, ain't gonna lie, but we'll see how these earnings look. Look at this. Oil continuing to go up. Nvidia, we're 25 minutes from all the big earnings, right? And even though Nvidia is not reporting earnings, all the companies that pay Nvidia is reporting earnings. And so I think it's important. If we look at the semiconductor index, maybe I should have added more there. I thought about it, but that's a lot of money. I think I'm just going to watch this, see how it plays out tonight. I got a good amount of shares. But yeah, we're see. SOX looks, it's up. Even if we look now, it hasn't even retraced to the first fib target. which is like a super low target, right? The 236. To get to 0.5 is 386. To get to the golden pockets, 360s. So it's definitely, the market's running hot like everything's okay. Oil is running like everything's not okay. And the last thing I want to look at, oh, wow, look at this. Jamie Dimon wrote, some kind of bond crisis ahead as global debt risk build. Well, that's not good. Yeah, I want to see what. Okay, so everything's going up. So, look, the 2 years up almost. Wow. Yeah, so guys, whenever you're looking at this, when interest rates go up, that means people are selling. And this is basically how central banks of the United States finances their debt, right? So it's basically saying if you give the government money for, 2 years, they will pay you this amount per year. And they have auctions, and the last auction didn't even go through. They had to tell the interest rates at the end. If we look just from 226, so about 2 months ago, we're up. Wow. We're up almost 0.75. Yeah, it's like the stock market's just pricing all this out. And that's why I just think, guys, just be careful. Just be careful. If we look at February, at this point right here, stock market is up, or semiconductors, which makes up almost 18% of the stock market now, is up 42%. Bonds are up almost 3/4 points, guys. That is a lot. And so just be careful. Just be careful. The number one thing we can do, especially at tops of markets, is, get capital in crypto. We're kind of in the middle of the bear market, I think. And my overall opinion is, the money is made when you buy, not when you sell. And when we're all frothy, like NVIDIA, is it going to be a $10 trillion company one day? Maybe. I hope it is, but is that worth me top blasting all-time highs in a market that hasn't been this frothy since the dot-com bubble after a huge 50% run-up in the semiconductor index for a 2x over 5 years? No. I'm wanting to look at other companies. One of my favorite cryptocurrency play is this right here, Circle. Y'all know in the Discord, I put a buy alert, and then I talked about it on this stream at $55 way back here. The only thing I regret is at 120, I sold half my shares. And so basically I have like 500 shares of Circle that are free. But I wish I would have. I don't wish I would have kept. I guess it's good. I made money because I could buy them back now. I could get, 750 shares for the same amount. So I guess I'm not, but it's a long-term hold for me. Like I did regret it when it kept going up. I was like, golly, this thing's awesome. But, this is an amazing company if you've never looked into it, Circle. I'm looking into Ondas is, I don't know. I might put a little bag into Ondas. I do already have a few shares. It's a drone company. But right now I'm wanting to look at more quantum, maybe some quantum stuff. If we still have this going, I think no matter what, we need power and like energy. And so I'm looking at, you know, I know a lot of people don't think nuclear is going to be able to happen, but I disagree. I think that this administration will get legislation through that'll help. And, you know, if we look right here, this is the 4-hour. If we come over here to the daily, see, we had a bull cross back here, sent it from $10 to $200, a 20x. Well, if we look here, maybe we get another low. I'm not sure. We can draw fibs on it if y'all want, but you know, we just got a bull cross on the 4-hour. Again, that doesn't mean it's going to go up, but you can see there was a bull cross here, and it didn't bear cross until it had went up to 200 and then came back down to 121. So these are lagging indicators a little bit. It just kind of shows momentum. But, you know, this company is 11 billion. You know, NVIDIA's 5 trillion, you know. So this is the kind of stuff that, you know, interests me more, you know. I haven't bought this yet, though. But this is also something. The last thing I'll show you guys and is, hold on. Is again over here on my Discord, I posted nuclear stock deep analysis and quantum stock deep analysis. I mean, I post everything. Made like 20K shorting the Qs on the first run up. I mean, guys, I really recommend checking us out. Good morning, good night every day. Perpetual futures trades, shorting stuff, technical analysis, different crypto. I mean, it's the most complete financial Discord out of anyone's, in my opinion. And it's only $50 a month to support me and be a part of it. And like I said, you can find it in the YouTube description if you're interested. We would love to have you there, a part of the Finance Freeman family. But yeah, let's keep looking, see if we can make it above this. That would be bad. But so far, all eyes on earnings coming out in about 15, 20 minutes. Listen to the earning calls. CapEx, see how much they're spending, if they're increasing spending. I don't know if markets will like them increasing spending, but I could be wrong. We can debate it tomorrow, but you know, I feel like the markets are looking for a reason to sell off. And so we will see. But as always, guys, thank you so much. This was the FOMC meeting. I hope you enjoyed it. I know I sure did. So I love you all. We will see you tomorrow at 12 p.m. Central Standard Time. I hope you have a wonderful night and take care of yourself.